Okay, so I know most of you know Rosie from BB&T, now Truist. She has been our bank representative for quite a while now, and she's one of the keys to our success at Native American Advancement Corp, NAAC, and the sponsor of this My New Home program that we've been running since 2015. And through this program, we've helped quite a few people purchase their house. We do everything we don't charge anything. We help you with your financing, your budget, and to find, ways to get information on your mortgage loans. So I'm going to share the screen, and Rosie is going to give her first presentation. We also have another guest speaker coming, Shanna. She is a underwriter, and she will be on off the cuff answering questions and telling you exactly what you need to do in today's world to get a loan. So I'm going to share my screen. Okay, can you guys see the introduction, the PowerPoint presentation?
Yeah. Yep.
Okay. Can you see it okay, Rosie?
I can, yes.
Okay.
Okay. Yes, thank you and good evening, everyone. My name is Roseanne Tizano from We're Truist. The other gentleman that's underneath my name here is Jason Smith. I work together with him on occasion. He's one of our lending officers as well. And I appreciate your time and appreciate Ty letting me join this absolutely awesome program that we're working together and she's offering to everyone. So we can move to the next slide. Thank you. So a mortgage lender. So for folks, when you're looking to buy that first house, it's very important that we suggest that you interview at least 3 lenders before making a final decision. It's just like, second and third opinion. To make sure that you get what you deserve as far as the service and also product. Start with the bank or credit union you have your checking and savings account with, or other relationship, because they're familiar with you, your relationship. And most banks and credit unions and mortgage lenders, brokers, do offer existing clients that are creditworthy, better rates and all of that stuff, and they know your relationship. You should verify the lender's, verify that the lender participates and is knowledgeable in down payment assistance programs, and make sure they use a product you want, that it fits your need. Mortgage lender versus broker. So kind of do one and the same, but different. So the difference between the two, kind of go through this quickly. And if you have any questions, we can kind of go back towards the end. So a mortgage lender, which falls under a bank, lends our own money, will originate and service the loan in-house, will cost less than a mortgage broker. The borrower can use down payment assistance programs. On the other side, versus then what a mortgage broker would do, lends other people's money, will sell the loan, will cost more than a mortgage lender. Borrower cannot use down payment assistance programs. Mortgage loan professionals, people who work for originators. So a mortgage loan officer, it's kind of the definitions, will take your loan application. A mortgage loan processor packages your information for approval. Mortgage loan underwriter makes the final decisions in your loan. That's a big piece to the puzzle for us, especially in this environment where a lot of folks are refinancing. You have those 3 steps. You have your mortgage loan officer, takes your application, talks to you, and puts it in the system. The processor packages your information, makes sure everything's ready for approval and they have what they need. Then the underwriter actually is the one that makes that final decision. Folks always think like, oh, well, do you approve my loan? No, it goes through this process. People who work for the originators, I think this is the same slide. Yeah. Thank you. So here's a great slide and great information. Pre-qualified versus pre-approved. So what's the two differences in being pre-qualified versus pre-approved? So pre-qualified, a lender will base affordability on buyer's information without verification. Will give a borrower a pre-approval letter. Pre-approved, lender will verify buyer's information and provide buyer with closing estimate. Types of mortgage loans. So there's many different types. And again, it depends on what fits you best in your need. So there's FHA loans, which are Federal Housing Administration, insured by the federal government, usually 3.5% down payment. VA loans for veterans, through the Veterans Administration. Vets and spouses need 2.14% or 0% down, the debt to income. So conventional is Fannie Mae and Freddie Mac, 3 to 20% down payment. Types of mortgage loans, there's a fixed rate mortgage and adjustable rate mortgage, an ARM. Really in this environment, and if you have, not to say we don't suggest ARMs, but really the best product or type of mortgage is the fixed rate mortgage, the FRM. Principal and interest payments stay the same. Rates will stay the same for the life of the loan. Safer option if staying in the home for long term or not sure how long you will be in the house. So the adjustable rate mortgages, its principal and interest payments will change during the adjustment period, might be fixed for 1, 3, 5, 7, 10 years, will adjust after this time period, and rates and payments can go very high. So, say 8 years ago, 10 years ago, or if you're younger, or a lot of people in the military might choose this, or if you're transferred often within your your job that you do, adjustable rate mortgages might be something that would be a product for you. So the difference between the two. Documents needed for the loan application, super important, because if we don't have a full package, then it's not going to get in the hands of the underwriters after the processor looks for it. So contract of sale signed by all parties. Money for appraisal and credit report. Most recent month of pay stubs, keep sending. 2 years most recent W-2s, 1099 forms. 2 years most recent federal tax returns, all pages. Recent award letters for Social Security or retirement. Other income docs, child support, alimony, etc. Most recent 2 months bank statements, all pages. Most recent quarterly statement for a 401k, 401k terms and conditions. If you're a VA certificate of eligibility, bankruptcy, petition of discharged docs, divorce and or separation documents. So information needed again for the loan application, landlord's address and telephone number for the past 2 years, name and address, telephone number of employer for last 2 years, payroll contact information, account name and number, assets, address of other real estate owned, copies of paid in full letters for delinquent accounts if necessary. We often, and very, during COVID, it seems like, and with the mortgage process, loan process, home equity, I mean, this is a lot of information, but it's that the banks are doing their due diligence in ethical, proper lending procedures. Loan estimate, the LE, that loan estimate will itemize the list of your fees and costs associated with the loan, must be given within 3 days of application. So make sure you get that loan estimate so you know what you're looking at. It'll cover every expense, including appraisal, inspections, title fees, origination fees, and government fees. The loan estimate is only an estimate. The final closing cost may differ a bit, up to about 10%. So discloses the annual percentage rate, the APR, which is a combination of interest rate and closing costs, shows a true cost of the loan. Below is an example. We can kind of skip this because that's a lot of details. Mortgage loan process. So this is super important. Everyone is taking advantage of how the market is the past 2 years, year and a half. It seems like it might adjust itself by mid next year, but when we're doing refis especially, it takes at least 90 days. Purchases usually go through in 30, if we're very lucky, 30 to 60 days tops, but know that it's 30 to 60, 90 days to process, depending on the borrower's circumstances. Within 3 days of application, you should receive full application, including the loan estimate, gives you a breakdown of your settlement fees and amortization. You must give your intent to proceed before your files move forward in the process. That's also important. Once all fees are paid and documents received, the loan officer will order appraisal and title work. Your file is reviewed by the underwriter and they provide a list of conditions. That's kind of where the back and forth goes. It's very critical. We have templates now, and the client actually applies within this template and has that ongoing accessibility to this template, which gives them hands-on to know exactly what's going on with their loan, because those conditions have to be cleared. The loan officer and loan processor will work with you to gather the conditions. The mortgage loan processor will verify your credit. Super important, we say that over and over again. Rental history, employment and income, savings and assets, affordability. Want to make sure we put you in a house you can afford. Once all conditions and reports, appraisals, title, HOI are received, your file is sent back to underwriting for final review. Excuse me. Your file is fully approved and moved then to the closing department. Appraisal versus assessment. So the appraisal is when, depending on what type we do, with a purchase, it's a full appraisal. The appraisal is the value that's based on the market. The appraisal is conducted only when you buy or sell the home. The appraisal determines market value of the home. The higher the appraisal, the better that is for the client, of course. And the assessment is the value is based on tax base. Assessment is conducted every 3 years. The assessment determines your real estate taxes. The lower the assessment, the better. Closing and settlement, that's always fun. The closer for the lender will prepare and send the borrower a closing disclosure. It's called the CD. So the CD must be provided to the borrower at least 3 business days before closing. The borrower must acknowledge receipt of the CD by viewing it in their portal or signing with a pen. It's amazing now what we can do with e-sign and sending it through our virtual devices. Closing must be postponed if the CD is not viewed within 3 business days. The closer for the lender and the title company will do a check and balance until they both agree, and then send a final CD to the borrower prior to closing. Dues during loan process. So these are important. Be certain that you do keep all of your accounts current, paying them on time. Oh my gosh, this is super, super important. Keep copies of your pay stubs and bank statements, because if it goes over 30, 60, 90 days, the underwriters are going to ask you for the most recent update pay stubs and bank statements. They have to do that to be in compliance. Keep all receipts for credit delinquent accounts for proof of payment. Give the lender copies of documents quickly. Stay in close contact with the mortgage company and do what they tell you. And don't apply for any new credit while you're in that process. Here's the don'ts. So be certain that you don't, and I just said that, apply for any new credit. No one should pull your credit or co-sign for anyone. Quit or change. Do not quit or change your job unless it is for more money. Do not change banks, close accounts, transfer monies, or deposit large amounts. Do not lie to the mortgage company. That's in red. Mortgage rejection, why that might happen. insufficient documentation, non-compliance with program guidelines, unacceptable credit, unacceptable rent history, excessive mortgage debt ratios, unstable employment and/or income, cannot meet minimum down payment requirements, and or have no assets. Or, which sometimes happens, lately it hasn't in the market, appraisal comes back in a lower value. Hot topics: co-signed debt collection, student loans, tax debt, federal and state, cash deposits, Cash App, PayPal, Venmo, Zelle, stop using, especially for deposits into your account, large unusual deposits, withdrawals or transfers, NSF funds, tax returns for self-employed. So if you're self-employed, we as banks usually ask for at least 2 years of business returns with all schedules and personal returns. So when you give the mortgage underwriters and processors all this information, they look at that. So they're going to look at what kind of cash is going in and out of your account. I know Ty speaks very passionately about, budgeting and all these things. So if you're in the process of, buying a home, you need to watch your spending and watch what's going in and out of your account, deposits, unusual deposits, withdrawals. Make sure that you don't become overdrawn, because that's a red flag if you're spending more money than what's in your checking account. Thank you.
Thank you so much, Rosie. That was great
Sure.
information.
Sure,
I
thank
saw
you.
a couple of things that I think we may need clarification on. When you said stop using payments like Venmo, Cash App, those are very popular. What if
Yeah.
you are self-employed, or such as we do? We have a farm. So a lot of times, if somebody comes to buy a cow, they'll pay me Venmo or Cash App.
Right.
So now when you're saying, is that a red flag for the bank, or
So to say it's a red flag, I mean, there's a lot of fraud wrapped around that. And then that's a lot of cash going in and out. I would say just use it at the minimal, or just yes, and it has become very popular. Just be careful of how you're using that, because we always want to see like a direct paper trail that we can look at and track. So
that's really important, especially for somebody that's, self-employed.
Yes.
And in that type of industry, you want to.
Right.
That's interesting. That's very interesting. Something that no one ever thought about.
Right. Same thing as if like someone gives you a gift of monies when you're buying a home, the lenders will ask you for a letter that both people have signed and notarized, about like that gift, that you don't have to pay it back. So there's a lot of different things they look at. Yeah.
Yes, I did have a situation exactly like that. And it was a special event for a couple. I don't want to give too much detail,
Sure.
but it was a special event. They received a lot of cash.
Right, right.
So, and the cash they deposited in the bank, but it was difficult for them to come up with their paper trail.
Yes. Okay.
Yeah.
Right.
I finally went through. They had to get letters from everybody that did.
Right.
Yes.
Yes. Yeah, and that's on the business side too, because whether it might be a a silent investor or silent partner, and we have to know if that person has to pay that back, because then you figure that amount of money into their debt to income. So it's very much critical that everything's and look at everything.
Yeah. So okay, so that's one red flag. And I because there's going to be a lot of people that want to buy a house that are self-employed.
Well, it's not that you can't be self-employed, Ty. It's just that they are going to. So on the home equity side or the mortgage side, if you're self-employed, we want to look at the business tax returns with all schedule and personal returns. So it's that's the self-employed part of it.
But you're going to look for the 1 month income also. So let's say you run a restaurant, and a lot of your business is cash. You're able to accept the restaurant receipts,
Right.
and you
Yes.
cash register receipts as cash. Okay.
Right. Right.
Give that to the accountant, and the accountant does at least the quarter tax, tax.
Quarter tax. Yes.
Okay.
Yes.
Okay.
Yep.
And I did have, I also want to mention too, we had a client that was used to transferring money back and forth into the husband's account, wife's account, savings account. And that also became an issue where we had to trace all of the money back and forth from account to account. And the person almost didn't get the house because of it.
Yes. Yes.
Yes.
Yep. They look at that. Absolutely.
They do look at that. They do look at that.
We do. Yes.
Yes. So I know there's a lot of people on here. They're not, they're not showing, but now's the time to ask any questions. I know I was hoping Shanna got on, but I don't know if the weather was bad because she's in the Washington, D.C. area.
Oh, yeah.
So she may not have power because she hasn't responded.
Okay.
But we can get her on another time because she's a underwriter.
Yes.
So she sees a lot of these issues.
Yes, you see a lot. Yes.
She sees a lot of these issues, and for an underwriter that doesn't know you and it's just looking at your paper trail.
Yes.
Yes. They don't know who you are. They don't know your face. They don't know your family. They don't know. You can't just think they're going to trust you like your neighbor does.
Right. Yeah, and that's where on our side. That's a great point, Ty, where we have to tell the story as your banker, even a write-up where, it's this, it's that, give them some information about the loan, in text and in verbal communication. Absolutely.
Okay. So there's a story that goes with this. Yeah. See, that's good information, everybody, because
yes.
if you're,
especially on the business side. Yeah. But I mean, we have to give them information about the client. Yes.
Yeah. And I know there are some clients that everything goes through pretty quickly. They'll have their, they'll provide 6 months of bank statements and it's consistent. They have a consistent savings that they add to. Those are the great clients. The credit score is 700.
Right. Yeah, that's important.
Longevity, but very rare.
Right.
Very rare. And, I don't know if Adam is on, but Adam, if you're still on, he was 20 years old when he got his loan.
That's amazing.
So
that's your son, Ty?
Yes.
20 years old.
Yes, I'm here.
Yes.
Amazing, Adam.
And he did everything that we told him to do.
Good. Yes.
Did everything. So he was diligent on keeping his bank statements, and he was, his paycheck stubs, and he was very organized. He had a steady income for the 2 years. And he did everything we told him. And, there's not that many houses in that price range that he could afford. So one diligent part was keeping an eye on the market. And he found a house that was listed that same day. And I'm sure I think, Adam, weren't there other people that put a bid on that house also?
Yes, there were actually 2 other families trying to get into this house.
Yes. And
the reason I got they accepted my offer was because I actually went above the asking price. The asking price was $79,000. I went to $80,000. So they seen as soon as they seen my offer, they were just quick to give it to me. And the house was only on the market for 3 days.
That's amazing.
And see, and some of this inventory came from where the lady went into a nursing home.
Oh. Okay.
So when they do that, they have to sell it right below market value and to get rid of it quick based on Medicare rules.
Right.
Yeah, at the time, my realtor said that the house could have went for at least a little over 100, and it was listed at 79,000.
That's a great value. Awesome.
Yes.
So, and now the estimate of my house is worth 134 with the market today.
Very nice.
Yes. So he was very diligent. He watched the market on a daily basis, and his house was virtually maintenance free.
That's awesome too.
And that's awesome. But there's a lot of deals like that. So,
And then Adam, you probably have equity in your home now. So, if you ever needed to do some home improvements, you could get a second. Yeah.
Yes.
second mortgage. if
Oh,
you want.
yes.
Or just, yeah, so that's nice too, just to have as a cushion if something comes up, or, you want to do something, basement, new roof, whatever, yeah.
Yeah, he put a new roof on already.
Yes, yes. And little by little, I've been doing renovations
Yeah.
myself
Wonderful.
throughout these couple years.
Yeah.
Yeah.
So,
Great.
Yeah,
yes.
yeah. The major project I have now is the bathroom. So
Oh, okay.
Yeah, he's
yeah,
upgrading
yeah.
everything.
Bathroom and kitchen. As soon as I'm done the bathroom and kitchen, that's when I'll put it up on the market.
Oh, there you go, and you'll make your profit and go
Yes,
to the next
ma'am.
level.
Yes.
Yes.
Yes. And
Hopefully buy 2 more with this.
Okay.
And then Annalise that's on is already on her third house.
Yeah, third house, yeah.
This is her third house.
Nice.
By being diligent, listening, doing exactly what we said to do, making sure that all her paperwork is always in order. And how old were you, Lisi, when you got your house, your first house?
21 maybe?
21.
Mhm.
So then they bought a fixer-upper,
Yeah.
fixed it up because, we're a carpenter family, and resold it, sold it within a week of being on the market,
In a week.
had,
Yep.
had no place to live.
Both houses, yeah.
Had no place to live because it was sold so quickly.
Yep.
Yeah. Found another house, a very nice house. And how long did you live there?
2 years.
They lived there 2 years, outgrew it, and sold that in a week or two, right?
Yeah, in a week.
Wow.
Because they renovated it, got another really good deal. And then now she's in her third renovation house, which
Very
is very
nice.
nice. Yeah. So this formula works. It's worked for myself and my family and all my friends and everybody that walks through. Our employees that work in NAAC, 85% have purchased a house. 85%. So, and a couple of them are almost done paying it off because we have other formulas on how to pay it down quickly.
Should push it right here. Okay.
But anyway, so is anybody else out there? Does anybody else have any questions? Does anybody have any questions? Now's the time to ask if you want to buy a house.
Yeah, I do have a question. Does the income have to be from the same place for 2 years?
Well, they do look at stability of income, Annalise, but as long as you're employed and there's not like a pattern, if you will, of consistent, like, for the past 10 years, you've had 5 different jobs. But if it's just something like you work for 8 years and then you change jobs and then change jobs again, as long as it's not like a pattern, it's fine that you have changed jobs. Yes.
Okay.
Yeah.
So she has 2 main jobs. She works for NAAC and she's hair cuttery.
Yeah.
Oh, okay.
That's consistent.
Oh.
Okay, yeah, that's
Yeah,
good.
right.
I'm talking more or less like, I know somebody who was doing, I guess she was a server at a restaurant. And
Right.
then now she's working for, I don't know what she's doing now, but she switched jobs and it's a total different ball game. But
Right.
we're talking within like 2 years.
Right.
So I'm just wondering how that would look.
So with waitresses and waiters, servers, that's, kind of cash. So that gets a little tricky. Is she buying the property by herself, or is it like a joint venture?
I'm not sure. I'm not sure which way she would be going. But.
Yeah. Yeah. She should be okay, but I would just have her. So I'm assuming in her tax return, she's claiming her income.
Yes.
Yeah, and like Juan was just saying, what we're saying is to make sure she keeps a paper trail of all, the pay stubs and paychecks, and, the bank statements will show her income coming in. Yes. Yeah.
Okay.
So, but if she has steady employment, I think the question is, if you have steady employment, that still counts towards lendability, correct?
Yes. Oh, yeah. I'm sorry.
Okay.
Yes,
Yeah.
it does. Yes. Yes.
So she's still lendable, even though she
She's
changed
still
jobs.
lendable.
She's making
Yeah.
it, she's going lateral or above.
Right.
Correct. Okay.
You came up with me.
Yeah.
Okay. All right. Thank you.
Mhm.
Sure.
So does anybody else have any questions? I know a few people on here were looking to buy a house. We're just looking at inventory. What's going on with the bank-owned inventory? Do we have any idea yet, Rosie? As I know they lifted the moratorium, so they're going to start foreclosing.
Yeah. So I mean, we do have foreclosures. I don't have privy to those lists, Ty, myself. Yeah, but that would be something that I'd have to ask Jason about, and I could always give you information on that to get back to you on that.
Okay.
Yeah, absolutely. Because I know a lot of folks, those are good deals and buys. Yes.
Right. Yeah. So
Yeah.
if we could find a way to maybe get some of that information prior
Absolutely.
to, and then have some of our people already pre-approved to know what's coming up, then the bank has less time on the market as a vacant house.
Exactly.
Yeah.
Good point. Yeah.
Yeah. So if they can like work with us, our nonprofit, to do that, and like part of our home buyer.
Yeah.
program.
So Jackie will be with me tomorrow, and I'll make sure I circle back that we follow up with that. Yes.
Okay. Okay.
Yep.
Yeah. So I wasn't sure. Now, is Truist also part of the foreclosure process that's coming up on October 5th?
I have to find that out too.
Okay.
Yeah. Yeah.
Okay.
Yep.
Yeah, because we're looking for inventory. I have a list of clients that need a house.
Right.
And,
Okay.
yeah, and they've been looking for over a year, and because of the lack of inventory in the bubble.
I know it's yes.
So okay, so do you have any idea of what's going to happen for people that just bought a house in the bubble? Does the bank have any what's going to happen now that the values may go down because of all the foreclosures? Do we know?
Yeah, that's a good thought. I mean they're buying high, of course.
Yes.
Yeah, and if the values go down, hopefully they had enough down payment, and the loan to values weren't that. We've done our prudent lending, so I don't see for our clients if that's going to be a huge issue. We do monitor that, make sure that their debt to income doesn't rise in the time that's more on the home equity side. So our bank monitoring background of it all, they look at all that and review all those loan portfolio managers, to make sure. So and on the home equity side, as the purchase is one thing, but on the home equity side, we don't lend up to 100% loan to value.
Right.
So there's always also that cushion too.
Right.
So,
Okay.
but that's a great thought. Like, what's going to happen again? Where I don't see where it's going to drastically change.
Okay.
I know I spoke to my mortgage broker about this. It's supposed to even out, but hopefully, the people that have purchased these homes won't get into any type of trouble or financial issues. That's the thing.
Well, the good part is the interest rate stayed low.
Yes, and then
So
the
it's
Fed
affordability.
that high, and they're keeping it at bay, which makes sense, because if they raise it, then that's not going to be a good thing.
Well, I read an article on the Stansberry. They may raise the interest rates in October because they have no choice.
Right.
Because the banking industry is suffering.
It is. Our margins are very tight because interest rates are so low. Savings rates are embarrassing if you want to, save money or open up a CD. So something's gonna, and it very much seems like we are in inflation. It's crazy what's going on, and something has to give.
Yes,
Absolutely.
Yeah, so if the interest rates rise, that's going to create a non-affordability in that housing bubble. So the housing prices have to get, shift back down a little.
Yes.
Otherwise, they're never going to sell.
Right.
Never going to sell, because the higher the interest rate, the lower the price, so that you can afford it with your loan.
Yeah, and it's been a seller's market versus the buyer's market because they're buying high, just like you said. So they definitely had to be credit worthy then to buy these higher priced homes.
Right.
Yeah.
So we're kind of looking forward to the reset, so that some of the clients can, so there's more, more affordability.
right.
So,
Absolutely.
I'm not looking forward to people losing their houses, but
Yeah,
we have
right.
clients that are ready to move into those houses.
Right.
So,
Yeah, there's a shortage of homes as well as rentals too. This has just been
yes,
so crazy.
it has.
Yeah, it's really very, it's
Yeah.
been a very volatile, environment with this whole COVID and with everything's going on. And, just the price of building a home is crazy.
Yes, yes,
Yeah.
yeah.
Another thing, people that are choosing construction, they're going to pay top dollar. Top dollar.
Yes,
Yes.
yeah.
Yes.
Yes, they are already paying top dollar. I had a house listed. This is the same house in Newtonville. The original price was $250. The family couldn't get the house. They didn't qualify in the end, which is some of the caveats that we didn't talk about with lending. As far as, your interest rate going up and down, if you're on that border, sometimes you can't get the loan. So
Right.
you couldn't get the loan in the end. Well, the lumber prices, because these are new constructions, drastically increased. We
Yes.
sold that same house for $290.
Oh, isn't that crazy? Yeah.
4 months later.
Yes. I've heard a lot of stories like that, Ty, that happening. Yes.
Yeah. Because the lumber cost, the surcharge, you have to put decks on. People don't put, take those into account.
Yes. Yeah.
Yeah.
It's
$290.
very,
I just sold it a week ago.
wow.
Oh, yes. Yeah. But anyway, yeah, that's Shanna. I wonder if she's going to be able to come on. So I'm going to mute myself. Does anybody else have any other?
Hello, I have a question. Hi, my name is Priscilla. Hi, nice to meet you. I have a question about the bank-owned properties. I really don't understand the process. I know that it's more involved, than just buying, a house from a seller outright. There's like a process. I guess you have to show proof of, just the same kinds of things that you would need for a mortgage. Now, is it more advantageous to try to pay or try to purchase one of the homes? Like, let's see, if you have the cash, or is it better to get a mortgage? I wouldn't know how to go about something like that.
So that question will be for you, Rosie, or Shanna. Hello, this is Shanna. She is a underwriter. So we weren't sure if you got stuck in the storm or something. So she's an underwriter for what is your Caliber Home Loans, right, Shan?
Yes, Caliber Home Loans. I'm sorry, I didn't have
Okay,
any
so
volume.
she was asking what the process is for either one of you on getting a bank-owned house.
Oh, the process of getting a bank-owned house. Well, that's a little different. That's out of my that's above my pay grade.
I was going to say the same thing. I mean, usually, go ahead,
Yeah.
Shanna. Yeah.
I would just look on I guess HUD, the HUD listing, the HUD foreclosure listings. I know that's how I got my second home. Actually, I went on the HUD for foreclosure listings, and that, I mean, other than that, I don't know. That's where you would find that information. Or each bank, they may have their own foreclosure listing, but yeah, that I have no dealings with at all.
My second house was a bank-owned house, but it was listed by a realtor. So I believe the banks go right through the realtor, so it's the same process. Yeah.
Yes, they do.
Right. Yeah.
But I had to get conventional because there was nothing in the house except for pipes going through the floor.
Okay, yeah.
So back then conventional was 10%, where I know sometimes conventional is 3% now, correct?
Conventional is up to 97%. Yes, 3% down.
Okay,
Yeah.
so now so when you get a conventional loan to get a house that has pipes hanging through the floor, of course you can't get a CO. What is the process? Because, you know, this was 30 years ago, maybe not that, yeah, maybe 30 years ago. The process to, we were able to buy the house without having to get a CO.
Well, for conventional loans, they're not as stringent as FHA or VA.
Okay.
So, I mean, it would go by your state and, you know, what the state requires, just like New Jersey, don't you have to have like a special septic or inspection or something like that, or something new?
You can buy as is.
Okay, so, well, yeah, conventional, yeah. It's as is. As long as the appraisal comes in as is, then we're fine with it. I mean, I've seen a lot of like renovations that were completed on appraisals, and it's the appraisal, as long as it's as is, it's fine. As long as the quality is at least a 4, the condition of the house and the quality of the house is at least a level 4, then we will accept it.
What's a level 4? I don't know.
Like I said, where they were doing some renovations, but the renovation wasn't completed. Like, as long as the stove is in, like the water is operating. Well, actually, no, all that stuff. That's a hard one. I'll let you.
So you
answer
could
that
buy
one.
a fixer-upper without having to get a 203K loan.
Well, a 203K loan,
It's a
a
construction.
203, yeah, that's FHA. So that has nothing to do with conventional anyway. That's like a FHA tag alone loan.
So do you
Tag
think
along loan.
more of those loans are, I mean, because we already know there's going to be a lot of foreclosures, and, you know, if you're losing your house, you didn't have time to repair or money to repair it or resources. So a lot of the houses that are going to go on the market, if anybody wants to take advantage of it, that's not an investor, there is an opportunity for them to get a conventional loan and then fix it up.
Yeah.
And move.
Absolutely. I mean, as long as there's no contingencies in the contract, like if a lot of the buyers, they're buying and saying that they don't require an inspection. If you get an inspection, then that might be something different. But yeah, but lenders, they don't ask for the inspections on a conventional loan anyway. So yeah, conventional is a lot easier.
So why aren't we going conventional for all the loans? What's the caveat that we're not using conventional versus FHA?
Well, FHA, you can go down as far as a 580 credit score. Like
Oh,
today,
I
I did
see.
one that had a 589 credit score. And I mean, a lot of banks, even though Fannie and Freddie require a 620, a lot of banks, they may have overlays on their guidelines that may, you know, some require. I remember when I worked for SunTrust Bank, which is now BB&T, their layover was a 660. You had to have a 660, even though Freddie and Fannie said 620. So, and they may go down to a 620, but say you have to put at least 10% down or 5% down. You can't do the 97% down. So it all depends. But FHA isn't like that. It goes down to a 580. As long as you meet the guidelines for everything else, then yeah.
So that's a good question. Yeah. So is anybody else? Shanna, did you want to go over a list of some of the reasons why people are not getting their loans? Like some of the things that, you know, that our people should avoid when they want to apply for a loan. Some of the, you know.
Like, I don't know what you're talking about. Okay. So one thing I want to do, I would like to say, like with the pandemic, you were allowed to, but I think I discussed this before, you were allowed to defer your payments. You have to be out of deferral for 3 months. Well, you have to make 3 monthly payments before you sell and then purchase a new home.
That's
know,
important
like,
because a lot of people are in deferral.
Yeah.
And what if you want to sell and then buy another one? You can sell, but then you can't buy another one. Then you're in limbo.
Yeah, you're in limbo.
But
so you have
if
to
you
bring,
sold
you have
it,
to bring your you have to make a payment and bring your mortgage current and before you sell it in order to purchase a new home.
So, but
And
if you sell
lenders
it, you're
are
selling
looking
it
at your
to
previous
satisfy the
history.
mortgage. That doesn't help.
Well, no, because you didn't bring, well, you can tell because on credit reports, it shows your history, it shows your payment and how much, well, new credit reports. So when it comes to mortgages, it shows your payments. It shows, okay, for we'll say June, we noticed that Shanna didn't make a mortgage payment. July, she didn't make a mortgage payment, and it shows in deferral. And then she picked back up in August and she made her payment, and it shows the amount of payment that she made. So it shows the whole history of the amount of payment that you made. So it's not just, it doesn't just show the 30 days, 0, 30, 0, 60, 0, 90 days late, because a deferral, it's not going to show as late. It's going to show your actual month and the actual payment under it. So.
Okay. And then Rosie mentioned something too about not using, accepting payments on Zelle and Cash App when you're buying a house.
Oh, you broke up.
Can you hear me now? Can everybody hear me?
I wonder if she's still talking.
I am.
I'm not sure.
Okay. Can you hear me now?
There's a lot of that because there's so much fraud wrapped around that,
Yes.
it's like, well, where's that going? Because I mean, when we see it on the statement, you can see, who they're sending it to, but the Cash App and Venmo, I mean, it's like we're looking at the paper trail. So, to try and use that to minimal or avoid that.
Oh yeah.
Am I back?
Definitely avoid transfers, period.
Yes. Yeah.
Definitely. I mean, I just had to review a bank statement that had 13 pages on it, and half the pages you have to look at every line to make sure there's no recurring debt that aren't on the credit report that we might have to include. We have to look at every every deposit. We have to look at everything. So using your debit card versus a credit card or just taking cash out is so much better. Don't make a bunch of transfers from account to account, nor the Venmo or the Cash App. Make it doing those transfers. It doesn't stop anything, but it does make it more difficult.
Right.
And it makes it more work for you when it comes down to you having to, verify every single deposit or every single transfer.
Mhm. Yeah.
Hey, Brian. So am I back? Can you hear me now?
Yeah, I can hear you.
Okay. So does anybody else have any other questions? We have two experts here right now. This is the time to ask. So I guess this is an early night since there's no other questions.
I do want to say, if you do have that 580 credit score or below is 620, don't be afraid to apply for a mortgage. The only thing they can tell you is no. I mean, they can't tell you anything other than no. Sometimes it's just better to try. And when you go in there to try, they'll tell you everything that you need to do to come back, and they'll work with you. Though I've known a loan officer that worked with somebody for a whole year just to get them, help them with their credit, give them advice. Hey, pay down this, pay it down every month. Even if you pay a collection account every month, it can turn your rating from a 9, which is, the lowest that you can get, up to a 1 that can also help your credit score. So don't be afraid to apply, always know what your credit score is. Go to Experian, go to Equifax, go to TransUnion, find out what it is, and don't be afraid to go in and apply. Like I said, the only thing that they can tell you is no, but they can let you know what you need to do for the future.
And also have a savings.
Having savings. If you get an FHA loan, you don't need a savings. If you're a veteran, you don't have to put any money down. So, I mean, don't be afraid to try. And with the VA loan, you don't even need a credit score. So yeah, don't be afraid to try.
And
with
someone can
anything.
pay for your closing costs now also.
And someone can pay for your closing costs. Yes.
Can you do
I
that?
have a question.
Yeah,
Hello.
go ahead.
Party
Mhm.
announcement. Do they have any what they call no doc loans anymore?
Not with
No.
Caliber. Yeah. Yeah. Those days are over.
Yes, yes.
Those days are over.
What about
Yeah.
a private lender? Priscilla, you were saying something about a private lender. Does a private lender have no doc loans? I don't know if she's.
Oh, there you go.
Yeah.
I was on mute again. But actually, from not really.
I mean, I
No,
have a,
they-
I think if you go with a private lender, your interest rate is going to be higher.
It is. It
Your
is.
interest rate is going to be a lot higher, but they're going to probably want more documentation. So it's,
I have a situation where I have a client that has $595,000 in the bank. They want to buy a house for $450,000. They want to put 40% down, but they really don't want to give no other information.
Yeah.
yeah,
Then,
yeah.
yeah. Yeah, that's, I mean, with the industry and, I mean, yeah, there's not too many banks that are gonna do a no document. I don't know of any. I don't know about
Yeah.
you, Shannon. Yeah, it's just,
No, yeah, we won't do it.
we won't do it. No,
Yeah, we won't do it.
no.
Wow.
Yeah.
Okay.
Just to have that much money.
Is there
in
a
the
reason
bank,
why?
yes,
I mean,
yeah.
I don't really know. I haven't spoken to him myself directly. He's a businessman from New York City. And he says that his banks in New York City don't ask him no information. All they do is he goes in and signs his name and they give him money. And he's
oh, he might have a line of credit. Maybe he might have even. I mean, that's using his assets as income.
okay.
But yeah, that's the only thing that I can think of. Or dissipation of assets or something like that. Not depletion of assets, but yeah,
That makes sense.
yeah. But
Okay.
this person that I did it with, they had $2 million and they bought, a house, a $750,000 house, and used their assets, which they used 3 years, divided by 3 years, and they still had assets left over. So, I mean, yeah, as their income. So
When you say use their assets, what do you ask from them?
just their assets, that's it. Like their stocks. So what they'll do is they'll divide their stocks by, 360 months, and they'll come to a income that way.
Yeah. And then Shanna, correct, you would have to show proof of that wealth, by your
Yes.
statements. Yes, you have to
Yes.
show
I mean,
proof.
he has a bank statement that shows he has.
Yeah,
We see the bank statement for Sean. His bank
Sure.
account shows $595,000 in the bank.
So what we would come up with income is, what is it, 595?
Yeah.
Oops. Well, that's not a lot. So his monthly income would be $1,600.
How much?
$1,600, $1,652.
That don't even cover the mortgage.
Yeah, exactly.
Okay.
Yeah.
Well, how do you come up with that number?
That's the
All right.
only thing that I can think of is where he wouldn't have to come up with any income,
No, I understand.
income itself. That's the only thing that I can think of.
Okay. Okay, then maybe he's got to pay cash for the house, that's all.
Yeah. Yep.
Now, do they do like lines of credit and those things? If he paid cash for the house and he wanted to take money out of the house on like an equity line?
Yeah, he could do that after he purchases the house. Yeah, he can, he can, yeah, he could definitely do that, but he's gonna still have to have some documentation, you know,
Yeah.
even to refinance. He's still gonna have to show income.
Absolutely,
Even for an equity line.
Yeah,
absolutely.
Okay.
yeah. Yep. They gotta make sure you can still make your payment.
Yeah,
Right, I understand.
Yeah.
There's no way to buy, I mean, without paper now.
right.
Yeah. Those days are over.
Well, we just sold a house to someone with an I-10. So they had I-10, I-10 number and rent receipts and passports.
That's
Yeah.
wonderful.
Yeah.
Yeah.
So, yeah. So there's other, but I mean, they had, you know, all their rent receipts for 2 years. They had to have it for 2 years though.
Mhm.
Their bank statements had to be 6 months.
Yeah,
they had I-10.
they'll definitely do that. Yeah.
Yeah. So that was
Yeah.
good. So does anybody else have any questions at all? Nobody? Okay. Well, I thank everybody for showing up. You know, you can always reach us on our website. If you have any questions or if you want to work with us individually to get a mortgage or a loan, we can do that for you. And Rosie, we wish you the best of luck.
Oh, thank you.
You know, I know it's like Rosie's retiring. This is her last Zoom with us.
Oh, happy retirement.
Yeah.
Thank you, yeah.
Yeah.
Congratulations.
Happy retirement, congratulations.
Thank you.
We definitely will miss you. And
Oh, thank you. I'll miss you all,
yeah.
from the bottom of my heart. Yes.
yeah, you know, thank you for this opportunity to work with
Yes.
Truist and
Thank
everything.
you.
And
Yes. And I so enjoyed and will never forget my first powwow experience.
I
It was
know, right? That was
no time or 3 years now. I think 2 years was the last one.
the 2 years
Yeah.
was the last
Yeah,
one.
2
Yeah.
Yeah, it was
Well, they're
amazing.
working on the one for this coming year. So
Nice. I'll have to attend. It was awesome,
Yeah.
awesome.
yeah, and it's always the second weekend in June.
Okay, cool.
Yeah.
Same place, the,
Same place. So
yeah.
far, same place. Yes.
okay, cool.
Yeah. So we'll be there. So
Okay.
okay. All right, guys. Thank you so
Good night,
much again.
everyone.
Good night.
Be safe.
All right.
Good
I
night.
really
Thank you for joining me
appreciate
Take
it.
later.
care.
Okay.
Bye.
Thank
Okay,
you.
bye-bye.
Bye now.
Good night.
Good seeing you,
Good night.
Shana.
Bye.